Good afternoon, everyone. This is Heather Iliff at Maryland Nonprofits, and this is the How Your Nonprofit Can Utilize the Paycheck Protection Program webinar. Thank you so much for joining us. We're going to start in just a second. We'll give folks time to get oriented and get logged in. So welcome. This is Heather Iliff at Maryland Nonprofits. How your nonprofit can utilize the Paycheck Protection Program. I've got some dogs walking by here. I'm sure many of you are in your home offices, as are we here at Maryland Nonprofits. We hope all of you are safe and well in this difficult time. And I know we're all scrambling to work on our applications for the Paycheck Protection Program. So I think we will go ahead and get started. Welcome. Again, this is Heather Iliff at Maryland Nonprofits, and I'm very pleased to be joined by Steve Taylor, who's Vice President and Counsel for Public Policy at United Way Worldwide. Welcome, Steve.
Thank you. Good to be here.
Thank you. And we have Javier Golden, who's Managing Partner with the Golden Group. Welcome, Javier.
Thank you very much.
And we have Henry Bogdan, who is our Director of Public Policy. Hi, Henry.
I'm here. That's all right.
Okay. So Maryland Nonprofits provides a range of support and advocacy for the nonprofit sector. We are the home of the Standards for Excellence program, and we also have as one of our programs the Maryland Association of Resources for Families and Youth. That's MARFI, the foster care and group homes programs. And we also operate the Nonprofit Development Center, that is a free program for nonprofits of less than $750,000 in revenue and less than 10 years old. And there's an application for that program on our website, very simple application, where you can get technical assistance and access to resources on our website. We have, we're the home of the Standards for Excellence program that has dozens and dozens of educational resources, packets that you can download, your board member job descriptions, bylaws, employee handbook, all of those things. Our motto is don't recreate the wheel. You can take those samples and use them in your organization. And this webinar is made possible in many ways by our collective advocacy that we do across the nonprofit sector here in Maryland, in Annapolis, and also on the national level. And we're really pleased to be part of the National Council of Nonprofits Network, and they also worked very closely with Steve Taylor at the United Way Worldwide to make sure nonprofits were included in the CARES Act that is made, makes this Paycheck Protection Program possible today. So your collective action and advocacy is so important as we continue through this crisis. We want to make sure that we have our voices heard. So we have a lot of resources available to nonprofits on our website. The COVID-19 What Nonprofits Need to Know page has all of the relevant links to the Paycheck Protection Program that we're going to be covering in the webinar today. And we also have a workshop this Wednesday on adapting your fundraising during COVID-19. So if you've had to cancel your events and you're wondering how to move forward, that workshop is for you. And you can see at the top of this page up to the right, the blue box, you're going to click on events in our events calendar. We're putting new events up all the time to help organizations get through this crisis. And we really believe that we're going to be able to make our communities stronger and be stronger together if we keep sharing information amongst ourselves and going to the hot spots as we share that with each other. I would like to just give us a disclaimer about the information on the Paycheck Protection Program and other information in this webinar. So even though we do have several lawyers on staff, and Henry Bogdan is a lawyer and Steve Taylor is a lawyer, we are not your lawyers, and this webinar does not include legal advice. And the information is changing very rapidly and really daily. The Treasury Department has put out new guidance regarding the Paycheck Protection Program. And as you'll hear from the presenters, we're hearing many different things from the banks. So we're here to provide you the best information as we know it, but you need to be discerning in your organization, follow your own organization's guidelines, legal advice, and the guidance from the Treasury and from banks as you navigate this program and others. So Henry, would you like to talk a little bit about our call to action and ways that you can get involved in our advocacy?
Yeah, we've been trying to do several things in the midst of all this. We've contacted our congressional delegation. We've contacted state leaders about major concerns. We've been in pretty good regular touch with the Maryland senators over in Washington on questions and issues that come up. We think it's really important that they continue to recognize inclusion of nonprofits in relief programs that are coming down. We're very concerned with how this is going to affect unemployment insurance costs for nonprofits who are self-insurers. That's a concern across the country. And working with the National Council of Nonprofits, we're trying to influence more coverage there in the next act. It's also something that we can try to influence with state advocacy, but probably requires a legislative change here to make that. So that's something we'll be looking forward to a special session on. We're trying very hard to have state and local government and federal contracts and grants continue paying nonprofits during this time based on their prior payments, rather than on the levels of reduced services you may be able to provide at any one time right now, because either staff is out, clients are down, clients are inaccessible, whatever it is, it's disrupting your ability to perform the services the way they were laid out in a grant agreement or in a contract. There are some agencies that are continuing to do this at this point. I just saw this morning where the Developmental Disabilities Administration has applying for a waiver to allow it to continue for a period of time paying the full level of reimbursements. And being more flexible in the kind of care it can reimburse. But I mean, this all requires, particularly on those issues, requires information from you, nonprofit providers, to let us know if your grant is being cut off, if your grant payments are disrupted, if payments have gotten slower than they normally are, which is not usually very good to begin with at the state level. So we can target which agencies we try to put the finger on to get some of these problems corrected, or at least encourage them to be more flexible. And we've put out a couple of alerts on that, but if you have information like that, we really need you to share it with us. Thanks, Heather. You're muted.
Thank you. So you can see Henry and I have our email addresses here, HILIF@MD Nonprofit and HBogdan@MD Nonprofit. Please do email us if you do have examples of that. And I should also just mention a couple of housekeeping remarks about how we're going to handle the question and answer. So Steve and Javier are going to run through the basics of the Payroll Protection Program and a couple other elements of the CARES Act for completeness sake, but we're going to really focus on the PPP. And you can utilize two different ways. Zoom has two different ways to ask questions. I see that someone has entered something in the Q&A box. You can also use the chat box. And where these controls are on your computer may differ. If you don't see something for Q&A or chat, you can hit the ... more button and you'll see chat there if you're participating on your computer. And if you are participating by phone only, you can raise your hand by clicking *9, by typing in into your phone *9. And later on, when we get to the question and answer, we may have a chance to bring you on to ask your question. So we will do our best to do that. We have more than 100 participants today and a lot of information to share. So I will go ahead and continue. And yes, you can continue to use chat and Q&A to type in your questions. So I would like to now turn it over to Steve Taylor, Director of Public Policy at United Way, who was really deeply involved in the actual passage of the CARES Act and has been following this very closely. So go ahead, Steve.
Thanks very much, Heather. It's great to be here. with Maryland nonprofits. You know, there's 1,100 United Ways across the U.S. in every state. And in almost every state where there's a state association of nonprofits, United Ways are members of the state association and work very closely with them. And so we've got pretty broad-ranging experience with state nonprofit associations. And I have to say that Maryland Nonprofits is one of the best, has a reputation nationally for being one of the best. So it's my pleasure to be here with you all today, and want to be sure folks in Maryland know the quality of their state association nonprofits. So
Thank you so much.
It's great to be here. So the CARE Act which is here under the full name is here under the headline on the lead slide here, is actually the third bill that Congress has passed in response to the coronavirus crisis. The first one was a really quick one. It was about little over $8 billion. It was almost all dedicated to healthcare and immediate sort of emergency healthcare relief. The second bill was, I think, a $104 billion piece of legislation, a pretty major bill in its own right. And there were some of the provisions you'd be most familiar with had to do with some Family Medical Leave Act provisions that were intended to help people get some paid leave and guarantee people at least a certain amount of family medical leave. So good bill. Turns out that was just scratching the surface. And then on the next slide, Heather, can I change these slides myself, or you guys change them there on your side? So this is sort of how the pool of funds.
Sorry, Steve, I was on mute. I'll have to change them for you.
Okay, all right. So this is just how the pool of funds sort of broke down for the CARES Act. It was ended up being $2.2 trillion. So by far the biggest single appropriation of funding ever by Congress ever. So huge amount of money, and you can kind of see generally where the pools of money go. So under the individuals, this is where the direct payments to individuals, the $1,200 that you've heard about, will come out of that. Some money to state and local government. Some of that funding will ultimately go to some of you in the form of contracts. But a lot of this money really is intended, I would say probably half of the money in this legislation is intended to keep people employed. And so the immediate crisis here is the number of people who are being laid off from their jobs. And so you saw, 2 weeks ago, the weekly unemployment report was 3.3 million new people applying for unemployment benefits, which by far broke the record. They never had anything that big. And then the following week, last week, it was 6.6 million people applied for unemployment. So, as you can see, if you just, in all the businesses that are closed and impacted, there's a huge issue with tons of people becoming unemployed. And so to try to get ahead of that, and they're not going to be able to completely get ahead of that, what they're doing is putting an infusion of money into employers. And so that includes big employers in one pool, small employers in another pool, and mostly nonprofits are included in that smaller pool. So what you see on this chart is $377 billion going into this pool of funding. And so when we talk about one of these big programs we're mainly going to talk about today, the Paycheck Protection Act, just keep in mind that, for early on, I think a lot of people were thinking, this program sounds too good to be true. They're going to lend us all this money and then they're going to forgive the loan in a couple of months. That doesn't sound, there must be some catch. And so the catch is really that the money is not really here to help you, it is to keep people employed. So I think we should go back actually to that agenda slide right before this, Heather, because I do think—
Yeah, sorry, my mouse is having trouble. Just a second.
Okay, so just to be aware, and we'll go back to the slide in a second, there are a number of programs that receive funding under this bill right here. under this bill, and you've heard about some of these things. These are a lot of the programs under the CARES Act that are accessible by charitable nonprofits. If you were talking to a lender a week ago or even 5 days ago, it's likely they wouldn't have known what you were talking about if you were talking to them about the Paycheck Protection Program. It's brand new. We're in the loop. They were actually out of the loop. What they were familiar with is this fourth bullet, the emergency injury disaster loans. Those pre-existed that. And so if you as a leader of a nonprofit or a small business person were going to your banker saying, hey, I want to apply for this SBA loan, they would think you were talking about this. This has a whole different set of criteria. United Way is not recommending to our members that they apply for that. The Paycheck Protection Program is by far favorable to that. I just want you to know, if you got weird answers from lenders, or if you're still getting weird answers from lenders, they may actually be confused about what program you're talking about. Today, we're going to give you the facts about the Paycheck Protection Program, and you can have confidence in those facts. And if you talk to a lender and they push back, you can say, no, I'm sure, but at this point now, a couple of days in, hopefully most of them will know about that. So we can talk about a few of these other things today, but I think we're going to spend the vast majority of this webinar on the Paycheck Protection Program. So on the next slide there. So here's some overview stuff. I want to talk to you a little bit about the overview. I'll tell you a little bit about the status of the program.
Sorry, Steve, if I can interrupt. So we will send out these slides afterwards, so you have access to the links.
Yeah. And so when I created these slides, these were the most current links. These may not be the most current anymore, but I know that Maryland Nonprofits has the most current links on their website. So you can click on these. You might do better to look at the Maryland Nonprofits website for the links. I think these links are still live. But basically, in order to apply, to be eligible to apply for the Paycheck Protection Loan Program, any 501c3 nonprofit with 500 or fewer employees can apply for this loan program. The most you can apply for is $10 million, or what's going to be the cap in most cases, the lower cap, is 2.5 times your average monthly payroll. So you take your you could take your previous 12 months. There's little ambiguity in some of these, the guidance so far, but you can take your previous 12 months, divided by 12, your payroll expenses divided by 12, and then multiply that amount by 2.5, and that is the amount you can qualify for a loan. What counts as payroll is more than just the salaries that you pay. So the benefits that you pay to employees. So the employer side of healthcare benefits, for instance, what you pay for your employees' retirement benefits, those sorts of things are included in payroll. And you guys know that health benefit can be pretty substantial for a lot of us. And so that increases the amount that you're eligible. There's some more details here we'll go into a little bit later on. The maximum interest rate for this loan is 1%, but you don't even have to worry about that because the loan payments are deferred for 6 months. And by the time you get to that 6 months, as long as you have used that money for the core purpose of this program, which is to keep people employed, as long as you use the money for that, then you can apply for forgiveness, and it is a shall in the legislation. If you use the money for what it's set for, the amount you have borrowed will be forgiven if you use it for the proper purposes. So it is essentially a grant. It's delivered in the form of a loan. You go to a lender. You don't go to the SBA. You go to the lender for the application, an SBA approved lender. There's 800 already approved. They actually have some provisions in there to allow lenders who haven't been approved to become approved. But you go to one of these lenders and you apply through them. You're processing it pretty quickly. and that's how you can get the loan. The third bullet here has a link to the 100 most active SBA lenders. So that's, if you don't know who to go to, that's a good place to start. Your best bet, based on our experience, is go to a lender that you already have a relationship with. If you have, a representative from a lending organization on your board, I would definitely talk to them, but go to a lender that you have a relationship with. The lender intersection is where people have had, nonprofits that have had problems, have had the most problems, but we won't jump into that yet. I suspect we'll get a lot of questions for that. Let me just, if you could just go to the next slide, and I just want to show people one thing, and then we can see if there's questions. Actually, this wasn't the slide I was thinking was there, but this slide just makes the point. The point with the chart makes the point about the number of employees in our sector. And so it's a little bit apples to apples, but if you take all of the nonprofit sector, which includes hospitals and universities, but if you take all of them into one group of employers, we are the third largest employer in the United States. So this is why Congress really had to include us, and this is why it makes sense for nonprofits to be able to access this. So on that next slide, which is where I thought I was going a second ago. So the challenge for a lot of people who are, and you may face this if you're talking to your board about this, they're going to say, well, we don't have a credit history, or, we don't, there's like, how are we going to borrow this money? This program sets aside all the usual criteria for qualifying for a loan. You don't have to prove your revenue. You don't have to prove that you were negatively impacted by the coronavirus. That's presumed. You don't have to prove a credit history, nothing like that. Because the purpose of this program is to keep people employed, all you have to do is check a list of certifications that are in the application. And the core one really, I think, is that the uncertainty of the current economic conditions makes the loan necessary to support your ongoing operations. And that is a very low bar. It's a good faith certification, and it is a very low bar. So basically, if you are operating any kind of nonprofit business in the United States, this certification applies to you. So be confident as you're checking that box. So why don't I stop here, and however you want to go on the next steps, Heather, as far as questions, or Javier, or whatever you want to do. And we can go back.
Okay, yeah, so Javier's going to get into more details. I'm seeing some of the questions coming in about what you can apply for. But one big picture question, Steve, on eligibility. So are churches eligible to apply for this?
Yes, they're not excluded from this. 501c3 charities are included in this, yes, including churches. And
Henry, did you want to add to that?
Well, just that Treasury issued guidance in the last couple of days. It's pretty wide open in terms of what the churches can, the salaries churches can pay with this. But religious organizations should check that guidance, and we'll have that notice up on our website.
Okay, thank you.
Do you want me to talk about the allowed uses for the funds, or Javier, do you want to cover that?
You won't. Steve, if you want to cover it, go ahead.
So let me just say broadly. So because the purpose of this loan is to keep people employed, in order to get forgiveness at the end, you'll have to show that you kept people employed. So on the application, it will ask you how many employees you have, and then when you apply for forgiveness, and you basically have an 8-week period to use the funds at the end, and the guidance for the forgiveness process hasn't even been done yet. But you have to be prepared that you'll have to have documentation of what your payroll is on the front end when you're applying, and then on the back end you'll have to show that you spent the amount that you received under this loan for a set of specific purposes. 75% of what you have spent has to be for payroll during an 8-week period. You can also pay your mortgage interest, not your full mortgage payment, but your mortgage interest payment. You can pay for your rent, you can pay for utilities, and I think there's a couple of other expenses in there that you may be able to pay. So to get forgiveness, you have to use this money to keep people employed and for payroll, basically, and to keep your doors open. So it overlaps with how you calculate it, except you can actually use it for more purposes. And as long as you do that, then you'll be able to get forgiveness at the end.
Okay, great. Thank you so much, Steve. Let's go ahead and go into Javier's presentation because I'm reading through some of the questions, and I know some he's going to be covering, and others we can come back to some of those questions. So let's see, Javier, are you? Yep, you're not on mute. Okay, go ahead.
Yes. Okay. Thank you. Thank you. So first of all, thank you to Maryland Nonprofits. We are privileged to be the CPA firm that is helping Maryland Nonprofits with its finances, as well as serving as its CFO for over 5 years now. And it's really been a pleasure for which we are really grateful and are happy to be here to provide whatever value added we can in this difficult process.
Thank you so much, Javier. And I will also just add that they've been working on our application and for their other clients and providing this guidance. So we really appreciate it. Thank you, Javier.
Thank you. Thank you, Heather. So just to start out with, just a note of empathy. If you guys are confused about what's happening, then we all are. We are speaking to bankers every day, and they are confused. So if they're confused and we CPA firms are confused, you must be very confused. So you're not alone. I'm going to try to shed light on the latest pronouncements. But if you read, for example, the Washington Post, there was a huge article this morning about the state of unhappiness with the way that this program is being executed. And there are many pending questions. Steve alluded to some of these, including the fact that what happens when the money runs out. So there is talk that it will be replenished. We don't know yet. But of course, the question of equity comes to the fore when banks are not taking applications to non-customers, and yet the law applies to us. So I'll try to touch on some of the more practical questions, so that at least gives you a guidance as to what it is that we do know. So if you could please go to the next slide. So I'm gonna repeat some of the things that Steve said. If you think that this program is almost too good to be true, then it is almost too good to be true. It is too good to be true. It's basically money that is given to you to continue paying people in your organization. And it will be forgiven without regards to your credit history, without regards, most importantly, to your need. And this is a huge point. If you have a surplus, if you have cash sitting in the organization and you don't need this money, will you be affected? And the answer is no. It does not matter how much cash you have. It does not matter what revenues, what sources of revenue you have. This program is open to all those that fulfill the requisites. And the requisites is, or the requisites are having less than 500 people, and that's it. So the application itself also is very, very simple. I think it's 4 pages, 3.5, out of which you really fill this first top third. The rest of it are questions that you have to answer and certification. So let me go into detail here. So here, you merely identify who you are, the type of organization, your EIN, your contact, and your address. Thereafter, they're asking for a computation of your average monthly payroll, which I will go into detail in just a minute. And basically that's it. That's all that they're asking. If we could go to the next slide, please, Heather.
And Javier, before you move on from that, a couple of people have already asked, what about this owners? They're asking for owners, and of course nonprofits don't have owners, and I had to put in my own personal social security number in our application. So how should nonprofits respond to that question of owners?
So we have filled this application in two ways. One was to put NA, because in fact there is no ownership to a nonprofit, legally speaking. Some banks have come back and said, no, you need to fill in something. So if that's the case, our recommendation has been that you choose an officer of the organization, could be the executive director, treasurer, or whomever else you deem fit, and put them as an owner of the organization, identifying the title of the officer. That has been our experience, satisfies what the banks want.
Thank you. All right, next slide.
Could we?
Yep.
Yes, one other. All right, so this is, in a few words, I'm going to try to explain how one computes the average monthly salary. This guidance comes from the SCPA, that's the National Organization of CPAs. They're, of course, very closely in touch with Congress and with the Treasury. So we believe that it's highly reliable. The bottom line is this. You take the gross pay, the gross wages. Normally, gross wages include some benefits that you pay to employees. If they're not included, then you add them on. So for example, if John Smith earns $50,000 and you contribute $10,000 towards his or her retirement account, you add the $10,000. The benefits that you can add, generally speaking, and again, Steve alluded to this, are retirement, health, life insurance. Those are the usual retirement that are paid outside of payroll. Leave, it's normally included within the gross wages. So if you take gross wages plus the benefits that the employer pays for, you should cover the first part of the equation. The second part of the equation is to take out the wages of those individuals who earn over 100,000. So you don't exclude them, you merely exclude the portion that is above the 100,000. And that's how you arrive at the yearly payroll costs. That amount is divided by 12, and in turn, it is multiplied by 2.5. So it's a fairly straightforward calculation. For this calculation, many payroll companies are already doing it for you. So make sure that you talk to your payroll company, tell them the period that you want for them to compute. Our recommendation is the prior 12 months, which is also the guidance of the SBA. Have them computed for you, and then just multiply by 2.5, and you will arrive at the number. Fairly straightforward. All right, could we please move to the next one, Heather? All right, next question. Many people are concerned about, again, as I said before, what happens if I have enough money? What happens if I have a grant that already reimburses my payroll? Can I still apply for the loan that in turn it will be forgiven? And the answer is yes. The only certification of essence here that is being asked of you is the second line before you, that you believe that current economic uncertainty makes the loan necessary. Steve also mentioned this. That's a pretty wide net. Most, if not all of us, can, with a hand in our heart, say, yes, we are in uncertain times. I don't know of anybody who can say we're not. So do not be bashful about applying for something that the government has identified as being a right to apply. The rest of the questions and the rest of certifications are pretty straightforward. What you're going to be spending the money on, the fact that you're a U.S. citizen, the fact that the employees that are covered are U.S. based, the fact that you haven't been convicted of any felonies or haven't declared bankruptcy or are not defaulting on other SBA loans. So pretty standard legal language for those that are giving money, but I trust that the rest of the question certifications are question certifications to which you can answer yes, meaning that you understand what you can spend the money on and you have not been convicted of any crime. So the only one of weight is the one that I just read. Please do not worry. We all, I think, can say, yes, these are uncertain times.
Thank you,
Could we move to the
Javier.
next one?
A couple of folks are asking about, and I'm not sure if you cover this in your next, yeah. So the loan money can be used for payroll, lease, and utility payments. But the payroll calculation is different than that. Can you just mention what it can be used on again?
Right. So exactly right. So the amount of the loan is based strictly upon payroll costs. The use of the funds, however, the use of the loan stipulates as follows. You must use at least 70% of the money in payroll for a period of 8 weeks from the moment that you get the loan, ending in June 30th, and no more than 25% of the monies in either rent, mortgage, or utilities. So let me give you one example so it sort of makes sense. Let's say that you want to spend 100% in payroll. Is that all right? The answer is yes. Let's say you want to spend 30% of the money in utilities and rent. Then the answer is no, that does not go well. 25% is the max. So Steve mentioned this, the thrust and the objective of the legislation is to keep your people employed. So the bulk of the money, 75%, must be dedicated to payroll, but you can go up to 100%. However, do not spend more than 25% into rent, mortgage, or utilities. Okay, could we go to, there we go. So I have tried to list here some of the notable points, questions that have been asked, and we have the answer to. So I'll just go through them quickly to preempt some questions that may be coming. I mentioned this before. What happens if you have a grant or you have a source of revenue that already reimburses for the payroll that you pay? Can you still request a loan? The answer is yes. This loan is not looking at revenue sources, only at expenses. So just make sure that you keep the people employed, do the right calculation, spend the money where it is that you have to spend it, and you will be okay. Can you apply for more than one SBA loan, such as the Payroll Prevention Program and the Economic Injury Disaster Loan? And the answer is yes. But you cannot use the monies for the same expenses, of course. But the answer is yes. You can have multiple SBA loans simultaneously. Can you apply to more than one bank? Yes, you can. But of course, the loan can be accepted from only one bank. And this is a huge, huge issue. We were discussing it with the panel before. What do you do when the bank that you have been banking with is not an SBA loan provider, and all other banks are giving preference to their customers? It's a great question. It's a huge ongoing issue. We have been able to find some small banks that will take non-customers, it's difficult. There is a provision where a non-SBA lender can apply for SBA lending privileges on a streamlined basis, just for purposes of this program, which means that, in essence, every bank is being given the right to give these monies. So if your bank isn't, and you have a relationship with, push them a little bit, and if not, I believe the recommendation that I only know of is you try as many banks as you can until someone takes you. Next one, please. Independent contractors are not included in the calculation. I know that I've seen guidance from banks, large banks, that say that if you are paying an independent contractor as he or she were an employee to be included, our reading of the SBA is very clear. You cannot include independent contractors, and the primary rationale for this is that independent contractors can ask for their own individual loans. And again, they can seek guidance with a CPA firm, with a legal advisor, but they too have a way of requesting a loan. They're not included in your calculation.
And can I pop in there on that point? I think it's really important for us as nonprofits to help people in the community know that they are eligible. If you know anybody who is self-employed, an independent contractor, a sole proprietor, that they can apply. I saw the SBA or the Treasury updated that those independent contractor applications are not going to start until April 10th. So those have not opened up yet, but a lot of people don't know about this program, and you definitely want to spread the word to all the people who you pay as independent contractors and others in the community. Thank you, Javier.
Thank you, Heather. Thank you. So yes, please notice that there is no intent of leaving anybody out who is employed in the organization. They just have to use different channels. That's it. Part-time employees, yes, they're included by all means. The documentation, what do you need? This is generally what is being asked of those applicants, of all the applicants. 2019, 940, 41, 44, these are the summary of the payroll reports, payroll documents. Again, your payroll company can give you this. Those are just earning records. And then the benefits that we said that the employer covers, that your organization covers, that are over and above the gross salary, health insurance, retirement, et cetera, et cetera. Those are the basic documents that everybody's asking for. Next one, please, Heather. Yes, so if you recall, in the box that we saw in the application, it asks how many employees you have. The answer to that question is the current number of employees that you have. You want to have the number of people that this loan will be covering. So it's the current one, not the average of the last 12 months. And you may have had turnover, people left, people came. It doesn't matter. It's the people that you currently have in your payroll. We talked about the time frame is the prior 12 months. So if it's the prior 12 months, it would be like March 1st to March 31st. I think I'm getting the 12 months right. March 1st to March 31st. There is no revenue size that disqualifies organization for applying. So if you are an organization that is bringing billions, God bless your soul, you're still qualified as long as the number of people is below 500. I think it's 500 or less. I believe that it covers 500. So revenue size is not a disqualifier. And I think this is the last slide that I have. That's a point, which is that if you laid off employees, what do? This program is intended to bring people on board, as we said. Therefore, do reinstate it and then ask for the loan. If you fire somebody, not to worry, just bring them back for purposes of this loan. And I believe that this covers my talking points, Heather, so back to you.
Okay, thank you very much, Javier. So, Steve, when you were saying that you're recommending the PPL and not the EIDL, you just meant like it's the more favorable loan, right? Can you say more about the difference between the EIDL?
Sure. So the bottom line is that of all the programs in that, that are designed to keep people employed, all the different SBA loans, this is the only one that is really free money. There is an emergency grant that's associated with the EIDL loan, that fourth loan early on, and Javier mentioned it as well. And so if you apply for that loan, then you can qualify for an immediate $10,000 grant that they're supposed to process and give you within 3 days. If you are denied the loan, then that $10,000, they just let you keep it. It's a grant. So that is like one kind of source of free money. But as I understand it, if you qualify for the EIDL loan, that $10,000 gets wrapped into your principal and it has to be paid back. But even if it doesn't, you're talking about $10,000. What we've heard reports earlier today is that an EIDL loan was originally loans of up to $2 million. And we understand that they have been limiting those loans to like $15,000, nowhere close to the big loans. So I don't know if they're running out of money there, but at the end of the day, it's money that has to be paid back. Similar to another program that is included in the CARES Act, which allows you to defer your payroll taxes. So the 6.2% of the employer side of the payroll taxes, Social Security taxes that you pay on behalf of your employees, that can be deferred, but you can't do that program and take the Paycheck Protection Program loan out. Those are mutually exclusive. You have to take one or the other. The payroll, the payroll deferral sounds pretty good because it takes effect immediately. The problem with that is that you still have to pay it back. And so if you defer your payroll expenses from now till the end of the year, starting in 2021, you have to pay half of it back in 2021 and half of it back in 2022. So there are a variety of other programs. Most nonprofits are not really in a position to take out loans and then to pay them back. It's one of the reasons why we're having trouble with banks, because most nonprofits don't have a lender borrower relationship with loans, and that's where some of the banks are drawing their line, saying, well, if we don't have that kind of relationship with you in the past, we're not going to do the Paycheck Protection Act. But other options, this is just by far the best. And so even if you're having trouble applying for it, keep at it, persist at it. Sooner or later, you'll get your application in somewhere. I think now's maybe a good time to mention that it is very possible that the $349 billion that has been allocated towards this program, it's possible that it will be exhausted. It's actually possible that it could be exhausted in a couple of weeks or even sooner. And so what the advocacy community is doing is going back to Congress, and we are already talking to Congress about doing a couple of things. One is singling out nonprofits as beneficiaries of this program so we don't run into these problems. And the other is replenishing the program. So we are already working on getting more money for this program in case it runs out. I feel pretty good about some success, that we might get success there. With regard to singling out nonprofits, we're asking Congress to set aside a pool of the funding that is specifically designated for nonprofits, so lenders will then have that pool to lend from specifically, and maybe even putting some incentives for lenders to, that increases their incentive to lend to nonprofits. So we're working on addressing this problem and how things may look going forward.
Thank you, Steve. And we definitely want to engage all of you in that advocacy. We'll have some action alerts and send those out to your staff and board members. So we try to get that into the next bill. Okay, so here's a question. The application asks for overall salary, and 75% of our staff are grant funded, and we anticipate the grant will continue to pay their salary. If we receive the full amount of the loan/grant, we probably won't need all of it. Do we just pay back the portion that we don't use?
So I'm happy to take that. So yes, you can always return the money. Yes, if you don't use it, you can always return the money, and there is no penalty in returning these funds.
And I would just add to that's absolutely right, and I agree with that. But you should look very carefully whether you can use the grant funding for salaries out beyond the 8 weeks that you're going to use the payroll protection funding. Because if you can use the payroll, the Paycheck Protection funding to pay all your employees over 8 weeks, and then use that grant funding to pay your employees going out further into the future, then that would be best case scenario, because it'll cover, this is a way just to extend out your ability to cover your overhead into the future.
Right, you're going to want to look really carefully. So it's really it's less of a consideration in whether you can apply for the PPP and have it forgiven, and more of a consideration for the conversations that you're having with your other funders and the restrictions that might be on their funding. It would be a good time to ask them to loosen those restrictions if you are required to show that payroll being applied to a federal or state grant, for example. Most private funders are going to be willing to loosen their restrictions. That's one of the things that's happening more widely in the nonprofit sector right now. Okay, so we have a question. Does the 8-week payroll need to start immediately upon receipt of the loan, or can it be a later date? Also, is the payroll to apply to the loan only through June 30th, 2020, or can it begin before June 30th and run into July?
So the guidance is that the 8 weeks, it's an 8-week period between the time that you receive the loan and June 30th. So it's a moving target. You can take whichever 8 weeks, depending upon when you get this loan, and use that period. But it does not extend beyond June 30th.
Thank you. And what if you have not operated for a full year yet?
So there is guidance also for new businesses, for businesses that just began, new organizations. And the guidance says that you, for purposes of computing the amount of the loan, you start not with the prior 12 months, but the date of inception of your organization. So there is a clause that allows you to do your computation in the time that you were in existence and not take a time period that you were not, that you were absent.
But I do think you have to have been in business by February 15th of 2020. So you at least have to have been around that long.
Okay. So what if your current payroll is significantly lower than the preceding months, the preceding 12 months?
So this is I actually was just talking to United Way about that challenge as well. And they actually, it was a small United Way, and they had a single employee whose departure was going to make their average payroll look a lot bigger. But just remember, the purpose of this is for employment purposes. So if your current payroll is less than what you could spend based on that 2.5 times your average payroll in the past, then what they really want you to do is to hire people back to use that money for that. So that's what they really want you to do. And if you can't spend the money, 75% of the loan in the 8 weeks on payroll, then you're going to have to give it back. And so what they want is that to be an incentive for you to beef up your payroll either in the interim, or or you'll have to give it back, or you will lose. What will happen is you may lose a portion of the forgiveness if you keep the money, and then you would have to pay it back like a regular loan.
Okay, thank you. And a question that came up earlier today was, can I ask for less, or could you just only have to ask for 2.5 times the average monthly payroll?
So I haven't come across that. Our recommendation would be that you ask for the maximum, what you compute the formula and you ask for that much. If you don't use it, then give it back, rather than ask for less and find yourself that you need this money. So I would suggest doing it in the opposite way. Ask for everything that you can and give back what you don't use.
Okay. And could that disbursement include a lump sum of annual leave that has been accrued?
The answer is no. The answer is no. The guidelines clearly specify that it is the payroll that you have paid in the past months. It's not fringe benefits, is not accrued leave or any other accrued benefit. It's monies that have already been paid. And if you do the computation the way that it is described, then when you put the gross payroll, you will cover most, if not everything, that the individual has earned in the prior 12 months.
Okay. So, and also in my 8 weeks that I'm trying to pay the payroll, I can't use accrued leave lump sums to people to make up that amount.
Yeah. Heather, I know we're coming towards the end of this and there's a lot of questions left, but could I just talk for 1 minute about the new charitable giving incentives?
Sure, go ahead.
Sure. So I know that a lot of you probably have most of your revenue from, from contracts and from providing direct services, that sort of thing. But a lot of you also get private donations, and United Way, that's where lots of our revenue comes from, and a lot of you rely on private donations. Under the tax law that was passed in 2017, really only people in the 10% of people that itemize their taxes have been able to take the charitable deduction. But as part of the CARES Act, Congress enacted a $300 deduction for people who don't itemize the taxes. So 90% of the people who don't itemize their taxes, they just fill out the regular, kind of straightforward form. If they make a donation up to $300 to a 501c3 charity in 2020, they will be able to deduct that from their taxes, even if they don't itemize their taxes. And so I know for United Way, probably for a lot of your donors are small donors. You got a lot of people that are giving you $100, maybe $50, maybe $25, maybe a couple $100. This is a huge opportunity for you to drive more of your private donations. And so I just wanted to be sure that you are aware of this. It is not for in-kind donations. So if people are donating food or clothes, and actually stock donations or in-kind donations, but it really is only for someone gives you cash, someone writes you a check, someone gives you a credit card donation. Those cash kind of donations count for this, and it's a great thing for you to promote to help your community and help your charities get through the coronavirus conference. Make a $300 donation, it's tax deductible. So thanks for indulging me in that for a second, Heather. Hopefully it'll help some of you.
Okay, yeah, that's a really important point, because some people are writing in and saying, we don't have any payroll. What can we do if we just want to pay our mortgage and utilities? So the PPP may not be an option for them, but these fundraising options would be a good one. So Steve, while we still have you, and maybe Henry and Javier can stay a little later to answer some of the other questions, but so as a church, 501c3 organization, is there any fine print in the CARES Act that could unintentionally limit the freedom of theological practice the church currently enjoys? According to the FAQs published by the SBA last week, it sounds like churches get a religious exemption from certain SBA regulations. What would those apply to?
So this is a big concern about churches and other religious organizations. taking any kind of government funding, that any sort of restrictions come along with that. So that's a good question. And the intent of Congress is for churches to be able to take this funding without any strings attached to it that any other organizations have. So, so the answer is going to be yes. You're going to be able to take the funding if you otherwise qualify and use it for the stated purposes in the time frame. You'll be able to take it without other strings attached. And I think Javier actually talked about the some specific guidance that address that in SBA 2.
Okay, great. Thank you, Steve. So I understand your time is limited today. We've got a few more questions. I think our other panelists can stay on a little bit longer. What about the issue of applicant is not in the business of lobbying? Henry, would you like to answer that?
Yeah, I've seen this phrase two ways. Not in the business of lobbying in some places, and in the subcommittee guidance that came out, not primarily organized for lobbying activity. Either way, no 501c3 should come under either one of those terms. I mean, your lobbying is limited. You're not lobbying for hire. You're not in the business of lobbying. You're organized and primarily to serve charitable purposes or whatever the defined C3 purpose is. So that should not be an issue for any of you. We know it is a concern for some organizations, 501c4s or 6s, under the EIDL, where that question is asked.
Right.
But
yeah.
not
And so C3s and C6s are not eligible for the PPP, but are eligible for the EIDL, and this question might be an issue there.
Yeah.
Okay.
So I was hanging up and I heard that question and I wanted to stay on, but Henry got the answer perfect. So thanks everybody, and I am going to sign off now.
Okay, thanks again, Steve. We really appreciate you being on today. Okay, so can the 25% that's not required to be used for payroll be used to pay contractors or other expenses?
So the answer is no. It's very specific as to what it can be used for, and it has to do with mortgage, interest, utilities, and rent. Nothing else.
Thank you. Okay. So Henry, I think you should be able to answer. It's about this charitable deduction. Is the $300 deduction dollar for dollar from an individual's tax liability?
No, it's not a tax credit. That would be a tax credit. This is a deduction. It comes off of your taxable income. It's called an above the line deduction. Before you calculate your taxes, this comes off the income.
Okay, thank you. Is there a list of what counts as a utility? Does phone and internet count?
I haven't seen a list, but if I were to make a recommendation, the answer would be yes. Phone and internet would count, because it's talking about operating expenses, and these definitely would fall under that umbrella.
Okay, so that would be a maybe. Okay, so where is the application available?
So if you go to the Treasury website and go to COVID-19, it's there. Or else I'm happy, Heather, to send you the link. Some people can actually look in the website of Maryland Nonprofits.
Okay,
yeah,
yes. So
we have those pages linked.
Okay. Okay, let me check the chat. Okay, can we use the loan to pay for salaries beyond the 8 weeks to stretch it out? In the case that the loan is too much, is there a payment penalty if we stretch it beyond that time?
So the question is, can you use it? The answer is yes, you can. However, that part of the loan will not be forgiven. So you can use the money, yes, but it becomes a loan and remains a loan that you'll have to repay. If you want it fully forgiven, you must follow the guidelines.
Okay. And someone's asking, can you repeat the repayment terms?
So, so we're talking about the use of the funds, I guess, not the repayment, right? So
it's a
right,
1% repayment after 6 months if you do not use the loan for its intended purpose. But generally, the expectation is you would use it for its intended purpose and it would be forgiven. So you would actually not have to repay it. Right?
yes. So the answer is yes. I don't exactly recall what the terms are, but it says that you have to repay after a particular period of time, and recall whether it's 6 months or 1 year, and the interest rate is 1%. Those are the repayment terms. But I can give you more information on that.
Okay. So one organization has broken their lease and they have a penalty to pay on their lease. Can they use the rent money for a lease penalty payment?
So I don't have the definitive answer, but I would, if I were the organization, my recommendation would be to go ahead and include the payment of the penalty and let the banker or SBA say no. But the answer is yes. It's something that you have to disperse. It's part of your operations, and it just so happens that it coincides with this period. So the recommendation would be yes to it.
Okay, and that would be at the back end. So that's not something they have to worry about right now when they're applying. That's more when they are applying to have the loan forgiven.
Exactly.
Okay, so the bank is asking that all the trustees of the church sign the application, which is a bit difficult in these social distancing times. Is that accurate?
Sorry, I don't have the answer to that. These are very specific questions, and at least the SBA guidelines do not specifically talk about that. So where the bank got it from, I don't know.
So this is something that we'd appreciate if you email that to us. There's not probably much that we can do about it because it seems that the banks can add requirements to the SBA application. And if you want to go with that bank, you sort of have to go with their requirements, even if it's not on the Treasury's list of requirements. But let us know about it because we're wanting to collect these stories and issues that people are experiencing. So I guess it's Heather, if you could email me about that. Okay. Okay, so I run a food bank and donations are up, so we have money in the bank. Would we still qualify? Yes. How much money you have in the bank is not a factor. Some of these are probably from earlier in the presentation. Our staff agreed not to be paid last week. Does it have to be included in the average?
So no, you cannot include monies that were not dispersed. It has to be in the payroll register. Now, accounting-wise, of course, what you can do is that you can actually record the amount in the payroll and be that a liability, right? A payable to the employee. So, but these are more subtleties as to how, if you have the intention and the obligation to pay it, and it's just a matter of the timing of the disbursement, there are ways of including it in the payroll register and not have the money dispersed.
Okay. So a couple of people are asking about the actual form. So they submitted already a different form to their bank, and now the form on the Treasury site has changed. And then there was another one. If you wanted to apply, did you have to do something separate for your mortgage and for your utilities? So no, this is one application. But I think it's the federal form is the basic bones of the application that the banks are using. And many banks have turned that into an online portal or an online application form. And some of them have recreated it exactly, and some of them have changed it, and some of them have added some requirements. So you may come across different applications. So I typed in the chat, someone said, well, I already turned mine in, but now Treasury has a different application form. You know, do I need to turn that in again? And I think the answer would be ask your bank. So make sure from the bank's perspective, do they deem your application to be complete at this time? And do you guys want to add anything to that?
I don't recall any really substantive changes. The newer version of that form actually took out a requirement for an owner's signature at one point that I thought was helpful, and it put the identification of your nonprofit status right at the top of the form. But I don't recall any additional certifications, Javier. Do you?
No, the changes were really minor, and as Heather said, I think that's the right advice. That talk to your bank, because you don't want your loan to be delayed because the bank did not think that you filed the right application. So this is more a question for your bank than anybody else.
Okay, so Henry, this is a good question for you. Too bad we don't have Patty Morton. It's about conflict of interest. So if we have a board member that is employed by a bank that we receive a loan from, wouldn't this be a conflict of interest? And actually, Patty might be on the line. Patty, if you are, raise your hand. I might be able to find you. But Henry, do you have thoughts on that?
Let me start. There could be circumstances that would raise questions, but normally, if you're a 501c3, in terms of an interested director transaction, there is a protocol the IRS has for how to deal with a situation where you're going to have any kind of business activity with someone who's on your managing group. We give you that. It's in Standards for Excellence. It's repeated a number of places. That person shouldn't be involved in voting or in the discussion by the board to go with that particular bank. All that should be documented simultaneously, but I mean, that should not preclude you from dealing with that bank.
Okay, yeah, so in a sense, it would be a conflict of interest because the bank would be receiving some of the funding, but that doesn't mean that you cannot do it. So you would look at your bylaws and look at your conflict of interest policy and disclose it in your minutes and have your board vote on it, or have the person not be involved in the decision. On a practical level, this is all happening so fast, and there's probably not going to be a board meeting about this. So probably what you want to do is have that board member at the bank fill out the disclosure form that you would use in your conflict of interest policy. If you don't have a disclosure form, maybe they would simply write a disclosure that would be shared with the rest of the board members, and then you could confirm that at your next board meeting. And let's see, I'm not able to see, here we go. Okay, so we have somebody raise their hand. So M. Kitses, I'm going to bring you on and allow you to talk. Go ahead. Oops, unmute. There we go, go ahead.
Oh, I'm sorry, I didn't mean to raise my hand, but thank you.
No problem, okay. All right, so next we have person whose phone number ends in 6636.
Yes, this is Neely Opplinger at the Metropolitan Washington Ear.
Hi,
I just
welcome.
wanted to share. Thank you. This is so helpful. I just wanted to share what our bank's requirements are regarding filling out their application and having to have a relationship with the bank by having at least one account, and also a lender relationship. Well, we have accounts with this bank, and they consider, when they explained in writing, prefacing the application, they said they consider having a Visa with the bank a lender relationship, which was pretty good because we obviously have never borrowed money from them or anybody. So I thought other banks might have that and might call a Visa if your organization uses a Visa or some kind of a credit card, that the bank regards that as a lender relationship, and that might be helpful to you to know.
That's
if
great.
It's not
Yeah.
in writing, maybe you could ask the bank if that counts.
That's a great suggestion. Thank you very much. So there's another question. Thank you for coming on with the suggestion. If we only use a portion of the loan for payroll, can we have that portion forgiven and then return the remainder?
That would be yes, I assume.
Okay.
I would agree with Henry. Yeah, the answer would be yes.
Okay. So we had a lot of open questions here, but I think most of them have been covered in one way or another. So I'm going to ask anyone who still has a question that hasn't been answered, please re-put it into chat, or you can raise your hand. If you're on the phone, you press *9 to raise your hand. And if you are on the computer, you can hit raise hand. You can click on participants, or you can click on more on your screen. Everybody's screen is a little bit different, and look for the raise hand button, or just type it into the chat, which is also under the more button if there are any more questions. Can we hire additional staff with the money during the requisite time period?
And the answer is yes. They're not asking for names, they're just asking for payroll amounts. So if you had 10 people in the past with which you computed the average payroll costs, and now, due to unfortunate circumstances, you have another 10 people, yes, that would qualify for the loan forgiveness.
Thank you. Okay, so 0005, you're on.
Yes, hi, this is David. Actually, two questions to follow up on that, and then an additional question. You can hire new staff so long as they're on payroll for 8 weeks. If they're on payroll, if after 8 weeks they are no longer on payroll, it would still qualify, yes?
Yes, that's correct.
And then secondly, also, if someone's salary is increased during the 8 weeks, so long as they're under the 100,000 cap, that also would be reimbursable, or the loan would be forgiven for that, correct?
That's correct.
And then last question, I know you touched on this before, and by the way, this has been a terrific presentation, but I know you touched on it before, and I understand that you can't use the value of unused vacation as part of your calculation for your loan, but can you pay out unused vacation during the 8-week period and have that part of the loan also be forgiven, because it's a cost we already have on our books, which normally you pay out when an employee leaves the organization? Why not take advantage and pay that out for all employees in a lump sum during the 8 weeks? Would that be permissible?
So I think that that's a very clever observation from your part. On my 2 cents would be that yes, that would be permissible, admissible, and subject to the loan forgiveness. Yes.
Thank you very much, sir.
Okay. Okay, so anyone else? Let's see. Where is the $300 deduction info documented so we can share it with our donors?
That's in the bill. It's in summaries of the bill. I mean, I don't think there are any tax forms with it yet.
Okay, but maybe we could put something out as Maryland Nonprofits, maybe just a blog post on it or something that they could link to their donors. Okay, we'll try to get that up. Okay, we need to hire 1 or more people to shift our programs to virtual delivery. If we haven't paid anyone before, can we apply for the loan to pay the new people?
So again, I think Steve mentioned this. I believe that you should have been in existence from, I think it's February 1st, at at the latest to qualify for this program. So it is not for those who are just getting going at this stage.
Okay, yeah, so if you have been all volunteer and no employees up until now, then you cannot, if you have no payroll, then there's not a basis in order to multiply by 2 times 5 to apply for. Yeah, so that's what she's saying, that they haven't needed staff in the past. So no, then if you don't have any staff, the PPP is not an option for you. There has to be some sort of payroll. Okay, I'm reading this question. Can you pay fall 2020 seasonal staff ahead of time so their payroll falls in the 8-week period?
So in theory, you can, although that's not the intent to make advance payment. So let me just backtrack. If you were to make an advance payment on payroll, it would really not be a current payroll expense. It would be what it's called an accrued expense. So accounting-wise, you're getting into very murky territory when you are recording a current expense for in fact, what it is a future expense. So I would be very cautious to advance payments that are not current.
Yeah, there's presumably going to be more guidance on forgiveness coming down. I don't know if they'll get to that kind of a question.
Okay. All right. So I think we've answered this question before, but just to, will be our last one, I think. So if we hired several new staff starting January 1st, but their salaries don't show up in our 2019 payroll. So you can still use that. It's the prior 12 months. We understand that some banks are using 2019 as the basis, but the Treasury guidance says the prior 12 months. So you can use January, February, and March as part of your calculation. So is there any other funding? So if we had to hire staff just because of COVID-19 and we can't use PPP, is there any other funding for this? So not through this federal government CARES Act or the previous COVID-19 bills that have passed. We do have some community foundations and other private funders that are putting out emergency funds for COVID-19. So private philanthropy is probably your best bet for that if you have not had paid staff before and are just trying to staff up now. So I think we'll go ahead and wrap up there. Javier and Henry, do you have any final remarks you want to add?
One question that didn't get asked that we've heard before, and that was whether or not when you're counting to 500, it includes its FTEs or full and part-time. And the answer is it's full and part-time. Part-time employee counts the same as a full-time employee. It's not an FTE count.
Okay, so all right, Judy Ditto just got another question in under the line. So we canceled our remaining concert for this season at the end of March. We paid our part-time musicians on 3/31 for half of the revenue they're losing. Okay, but are those part-time musicians, are they on payroll or are they contractors? So I think that's a key question. So going forward, we intend to retain the 5 full-time staff, but our payroll total will be substantially less now. Can we have our payroll forgiven? Oh, I see. So what you're saying is the calculation that you're going to put into your PPP is going to be a higher amount than you're actually paying out in salaries during this time. So the panelists did address that earlier in that you can hire more people or you can give the remainder money back, right? Is that right, Javier?
That's correct, Heather. Yes.
Okay, so the intent of the bill is to, spur hiring, and but if you do not have as high of payroll expenses now as you did in the prior 12 months, then you are likely to have to give some of the money, pay some of the money back, or yeah, that would be what you'd have to do. Okay, so I am Javier. Anything else that you wanted to add?
No, just, thank you and thank Maryland nonprofits and wish everybody, the best of luck.
Thank you so much. We really appreciate you joining today, and everyone stay safe and be well. If you're not already a member of Maryland Nonprofits, please do consider becoming a member at marylandnonprofits.org, where you'll see lots of other terrific resources on COVID-19, including the links that were shared today. Thanks everyone, and have a good day.
Thanks, Javier.